Hi. In this 3-minute tutorial, we'll explore how to set up a financial roadmap for your body corporate using the Mirfin 10-year plan and setting it on the path to prosperity in 8 easy steps. Before we start, we will need the following figures. The estimated annual expenditure for major capital maintenance projects. The amount of money on the body corporate's reserve fund account at the beginning of its current financial year, also known as the opening balance, and the interest rate earned on the reserve fund account. Step 1. On your Mirfin 10-year plan PDF, click the blue button in the lower right corner to access the online dashboard on your browser. Step 2. On the Reserve Fund Planning tab, ensure that the maintenance plan is up to date with the latest cost estimates as provided by your preferred contractors. You can ease the financial burden caused by the larger maintenance activities, such as exterior painting, either by staggering them over multiple years or by reducing their technical scope within reason. Step 3. Open the Financial Parameters page to update the body corporate's key financial data in accordance with the latest annual financial statement. Here, you will also be able to set the interest rate offered by your bank, as well as the forecast average inflation percentage for the years ahead. Step 4. When you click on View or Edit Cash Flow right here, you will notice some of the financial data reflecting in the Year 1 column, which represents the current financial year. The reserve fund's opening balance is displayed in the first row. In row 2, the minimum annual contribution is displayed by default in accordance with the legal requirements as set out in Rule 2 of the Sectional Titles Schemes Management Regulations. Row 3 indicates the interest earned, based on the previous year's closing balance. The fourth row allows you to balance out any immediate or long-term shortfall in funds. This supplementary contribution can be implemented in the form of a special levy or a financing loan. Row 5 reflects the total annual maintenance expenditure as calculated on the maintenance plan page. The last row shows the calculated amount of money that will remain on the reserve fund account at the end of the financial year. Step 5. You can increase the first year's annual contribution to a level that will optimize the body corporate's income, but you should not reduce it below the mandatory minimum. The annual contribution row aims to maintain a stable levy contribution year after year, escalated only by the inflation rate which we entered in Step 3 of this tutorial. Step 6. Use the supplementary contributions to make up for any shortfalls forecast during the 10-year period. Turning this toggle switch on will suggest the ideal amounts to avert a reserve fund shortfall, while at the same time minimizing the financial burden to the body corporate in any one year. These amounts can be manually adjusted to suit your specific requirements, and the auto-calculation function can be deactivated at any point. Alternatively, you can modify the annual closing balances by adjusting or staggering the planned maintenance costs. This can be done with the Reserve Fund Cash Flow Forecast table still open, thereby allowing you to observe the effects of your adjustments in real time. Click the link in the description below to view the tutorial on managing the 10-year maintenance plan. Step 7. Ensure that you avoid a negative closing balance for all years, as the body corporate cannot spend more money than it has. Also, it is advisable to close Year 10 with an adequate amount to start off Year 11. As a guideline, we recommend approximately 20% of the total estimated maintenance cost as at today. A seemingly minor adjustment in Year 1 can have a significant compound effect on the Year 10 closing balance. Step 8. If you aren't satisfied with your adjustments, you can return all values in the cash flow table to default by clicking Reset, allowing you to start over. If you are happy with your adjustments, click Save. To restore a previously saved version, simply go to the Timeline tab and select your favored version. Treat your 10-year plan like a living document. It can only keep your body corporate on the path to financial prosperity if fed regularly with the latest numbers.